Good afternoon, everybody. It's Nolan from Trade and Train. Okay, so let's have a little look at some charts of interest in the market and update you on some of the ideas we've been looking at this week. So, if you are following our free Telegram channel, you might have seen this chart that we posted this morning, and it's pound USD. Okay, pound USD is kind of bouncing up and down within this rising channel. Let's just zoom out a little bit. In fact, I'm going to get rid of these arrows because they're a little bit distracting. GBP pound is a little bit up and down at the moment because of continuing Brexit talks, but you know, technically what it looks like is something like this: impulse, correction, and after a correction we would expect at least another impulse. So if you don't know what impulse and corrections are, then take a look at our back to basics video on trends, which was a couple of weeks ago now, so have a look at our videos. But let me just draw in fact, I'm going to delete that and use what's called a Fibonacci retracement tool. We will actually do a video on the Fibonacci retracement tool in one of our back to basics videos soon. So if you're not too sure what I'm doing, then don't worry at the moment, but we will go through it at some point and we'll give you a little lesson on Fibonacci. But basically what we do is we draw the Fibonacci retracement tool from the start of the impulse to the end of it. So I'm looking at this as, even though that's a move down, a correction, a move down, an impulse, correction, impulse, in fact it's actually one big impulse on the bigger time frame. So this is an impulse, this is a correction, and we would expect another impulse. So we use a fib tool to try and guesstimate ahead of time where price could move to, where we could target. And the minus 27% fib is that first target. So what we would expect price to do, there's your impulse, there's your correction. Let's assume that the correction has ended here at this 61.8% retracement, and now we're going to break through and see another impulse. We would expect it to come down into this 1.24527 level, or at the very least back to test this low here. Okay, so we're looking at that as a potential idea for cable. Now, just because it looks nice and etc., etc., doesn't mean that's going to happen, but we will monitor price to try and identify that, okay, we think this is going to happen. Are we seeing the relevant price action to agree with our bias? So you can see yesterday we had a really big push up on pound USD, but today, you know, we've come to that top of the channel yesterday, and today we've got this bearish candle, which is a good indication that we're going to see some further downside. So we've come to the top of the channel now since sellers come in. End of day traders could look to place a sell stop below the low of today's candle, with your stop loss either above the high of today's candle or above yesterday's candle. Now, first kind of targets would be around the bottom of the channel, because you don't know that price may actually still bounce and do something like that again. You don't know. So you take first targets around here. Now, when I say first targets, you'd probably take off between, you'd probably bank, you know, between 50% to 70% of your trade. Move your stop to break even, and then, you know, let the trade run. It either runs and it breaks out of the channel, which is what we want, or it'll turn back, take you out, hit your stop loss, which is at break even, so you don't lose any money. But at least you've banked some money. So this looks good as a potential end of day trade. I'm going to put something on here as well called pivot points. I'm going to go on the hourly time frame. We've don't really talk about pivot points that much, but all I'll say is that we've got the central pivot point here, which price you can see on this hourly time frame is bouncing up and down on. And if we see an hourly close below that pivot point, then there's a good probability that price will continue downwards, at least to the next this is called S1, support 1, to this S1 level. So I am watching, and we at Trade and Train are watching to see if we do get a nice clean break of this pivot point. But price at the moment seems to be stalling. So whether we get it today remains to be seen. But that bearish momentum does look good. This is a 4-hour time frame. We've had 1, 2, 3, 4, 5. Assuming this candle closes bearish, 6. That's 24 hours of selling momentum, which is a really good sign. So there's a potential for this to at least come down to the bottom of the channel, potentially break out of it. So that's a nice chart to be looking at. I also want to show you Kiwi dollar. I'm quite interested in this one as well. Now this is something that's been on our watch list. Looking at a potential, this is the daily time frame, looking at the potential head and shoulder pattern. Left shoulder, head, right shoulder. It's just a fancy name actually for a change of cycle. So that's a high, higher high, lower high. So it's just a change of cycle from buyers into sellers. So we've got this another ascending channel drawn out, just like on pound USD. So I'll delete that for a minute and delete that. So there is a possibility that price could push up a little bit further, maybe test that 6,700. If you look to the right there, we've got that 67006. That's about it's called the big number or even handle. We could come and test that, maybe even have a little false break, something like this, maybe, and then looking for that rejection again, either back to the bottom of this channel or maybe even further down. But I just want to point something out on this particular pair. Within this channel on the hourly time frame, you'll notice that when we come to the top of the channel, we get this consolidation of price. There's not a lot of movement, in a particular direction. So at the top of the channel, we get this consolidation, and then all of a sudden, boom, the market sells off, and it sells off pretty quickly. A little correction there, and then it sold off again. Okay, we bounced at the bottom of the channel. Had an impulsive move to the upside. Again, came to the top of the channel. Look at price action. It kind of stalls and doesn't really do much until, look at that candle there. Breaks the high here. It's actually what's called an engulfing seller bar, because it actually, the previous bar's high and low is totally contained within the high and the low of the candle, and this closes lower than this candle as well. So it's an engulfing seller bar, which in itself, if you saw an engulfing seller bar at resistance, that is a sell setup. So if we see something like that here, then that is your sell signal. You'd put your sell stop below the candle, your stop loss above the candle, and then target would be the bottom of the channel. It may break further, but you'd be taking some money off at the bottom of the channel. With that one candle alone there, let me just see what you potentially could have got. Well, look at that. That just trading that one candle there, you could have got 2%, and that is basically your week done. If you can make 2% a week on a regular basis, then you're going to be doing very, very well. Let me tell you that, because it only takes 6% a month. Okay, that's assuming you don't take any money out of your trading account. 6% a month will actually double your account in 12 months. So if you can make 6% a month on average, every month, you don't take any money out of your account, your account will actually double. So, you know, trading isn't about, it's not about, you know, the volume of trades you take. It's about the quality. It's about waiting for the right trade to come along, being really patient, and then boom, getting the trade. So let me just remove that. So maybe this will push up into 67 or you know, bounce off the top of this channel. You're looking for a rejection, okay? And we're expecting this to push down at least into that 6,600, I would say. So have your eyes on pound USD, have your eyes on Kiwi dollar, because, you know, we are expecting potentially, you know, that move there. So just keep your eyes. So whether this will happen today, you know, it's getting a bit late now. We're in the UK. It's about 4:37 p.m. So the chance of it happening today, I'm not too sure. Maybe tomorrow, if it happens at all. But just keep your eyes on that. Pound USD short, Kiwi dollar short. Aussie Swiss. I'll take a look at this one as well. We've had a nice break below this level. This level's been holding for, you know, about 6,500 again. You know, it's the big number or the even handle. This level's been holding for quite a while on this daily chart. You know, we're going back to June here, the 18th, and it's not until 15th of October we actually closed below it, and we've seen further downside. So what we would look for as traders now is price to pull back, test that zone 6,500 or thereabouts. We never give it an exact number. We normally give it a kind of a zone for price to come back, you know, somewhere into there, and we want to see price reject. We want to see those buyers taking price up, and we want to see sellers, a seller candle after testing, okay? And we can actually see this downtrend that's going on as well. We can put a trend line on if you want to. Okay, but we can see the sellers. That momentum is to the downside. We've had our impulse, or some people call it a phase one. We've had our correction, phase two, and this is our phase one again, our impulse. And now we are in the correction phase, the pullback phase. So we would expect this to pull back. We're looking for it to come back, potentially coming back into 6,500. Then we're looking for sellers to come in. So if you see a candle pattern, something like this, potentially, look, we've got these buyers coming in here, and then all of a sudden we get these big seller bars. So a big change of sentiment, then that would be your sell setup. You'd be putting a sell stop underneath the candle, stop loss above the high of this 3-bar pattern. This 3-bar pattern is actually called an evening star pattern, if you didn't know. Again, you know, we'll do a video on that, I'm sure, at some point, but it's basically the change from buyers into sellers. We see something like that again up here. That is your key to look for a sell setup. So I'd leave it alone for now, because if you try, well, too early to sell now. You know, we want it to push up further up into that 6,500 level, and then, you know, start getting interested to see if we do get the relevant price action. The chart to look at, Kiwi CAD. Can you see on Kiwi CAD we've had this impulse, correction, impulse, or a phase one, phase two, phase one. And now we've actually changed trend, haven't we? Look at this. We're getting this impulse, correction, impulse, correction, impulse. So let me just draw that out for you. So now we are potentially in a correction, and potentially we may have another impulse come back and test this low. So we have a trend there, then we have a downtrend. This has pulled back quite a bit, in fact. I wouldn't normally expect it to pull back as far as it has done, but I'd still be looking, because we've got that descending momentum, I'd still potentially be looking for price to come down and test this low for another impulse. So I'm going to put some EMAs on there. Okay, so this is the red one is what's called the 50 exponential moving average, and the blue line is the 20 exponential moving average. You can actually see that we've gone into this downtrend. The EMAs have crossed over, and right now we're testing the 50 EMA. So, you know, it's had a fairly decent pullback. We'd now be looking for some form of price action to indicate sellers have come back in. Doesn't mean we're going to get that, but, you know, we would be interested, put it that way. There's nothing there at the moment, I've got to admit. What you could do is, with your EMAs, you could look for, you know, price to, you're waiting for price to kind of push down. Okay, you're looking for a little pullback, and then you're looking to get in again. You can also look for these EMAs to swap over. In an uptrend on this hourly time frame, the blue or the 20 is above the 50, but in a downtrend, the 50 is above the 20. Okay, you might want to wait for an EMA cross. It just depends on what type of trader you are. But you see, this is the price action I'd want you to look for. Sellers coming in, little correction, sellers coming in again. You're looking for those sellers coming in, little correction, sellers coming in again. So just keep your eye on Kiwi CAD as well. So potentially some selling coming in on Kiwi, because that's Kiwi dollar, yeah, and Kiwi USD and Kiwi CAD, potentially with some downside on the cards. Just take those EMAs off now. You know, whether you choose to use EMAs as a trader is totally down to you. As long as you can read price, you know, that's all you actually need. You know, when I say read price, you want to be able to read, okay, what's actually happening? Are we in an uptrend? Are we on the downtrend? What phase are we in? Etc. etc. If you're a trend trader, you obviously want to trade with the trend. You know, so if the general trend of Kiwi CAD was to the downside, you know, you wouldn't be bothered with this upwards movement here going against the trend. You'd be waiting for sellers to come in. Let's one more chart I want to have a look at is gold. Just remove that arrow. Gold had a massive move over the summer where it made an all-time high, highest price it ever, you know, come to. So right now, price is in this triangular corrective structure. And about this time of year, we do see the metals, precious metals, sell off, or we do see weakness until in November when we normally see price appreciate. So looking at this structure here, what we would expect is for price to continue to the downside. Now, whether it comes to here or whether it tests this low here, so it might not get to that point, it may come and test this low here, but let's just assume that it's going to come and touch this bottom of the structure for a third time, and then we'd be looking for it to bounce. First profits would be around the top of this triangular correction structure, but we would be looking for price to break out, because as we get into November, we do normally see the precious metals appreciate. So whether you'd be interested in selling, that's up to you, because that's kind of against the major flow. But certainly if you're not interested in doing that and you just want to trade with a trend, maybe you just want to sit this one out, be patient, look for price to come into this zone, look for buyers to come in, because this could be a really nice move from here. It could break out and you could get a really nice run. So guys, I hope you enjoyed that. Definitely some charts for you to keep your eyes on. Pound USD, Kiwi dollar, and a couple of my favorites. I would say just be a little bit careful with Pound USD if you are going to trade it. Okay, it does look good, but be a little bit extra careful with your stop loss, okay, and reducing risk as quickly as you can. The reason why I say that is because of the Brexit talks that are still going on, and we often do see a few spikes in the market, and you know, it may look as though it's going one way, and then all of a sudden, before you know it, boom, it reverses. So just be a little bit cautious when you are trading pound USD. Okay, I'm not saying you don't have to trade it, but just, you know, be a little bit more careful with your stop loss. Okay. Right, from me, Nolan, and the Trade and Train team, we'll speak to you again in the next video. If you've got any charts that you would like us to take a look at, then, you know, just put a comment below, and we will certainly do our best to do some analysis on what you want us to look at. So if you're not a member of the free Telegram channel, please join, and I will put the link in the description. Also, we have a free masterclass tonight, and that's at 6 p.m. London. I'll put the link in the description as well. And until the next time, guys, safe trading, and we'll speak to you really, really soon. Bye for now.